Hello and welcome to Wisdom Bites. Hope you're well. Thank you once again for joining us. Very much appreciated. And in today's pack program, I'm going to be looking at this particular move that will change your life forever, simply because that's what it's done in the last three cycles at precisely this particular time. And what we've just had in yesterday's closing of the weekly candle, this legendary signal which we've had in the last three cycles at precisely the same time. So we'll have a look at that and see what that really means. And of course, we'll have a look at one of the Bexit indicators to see exactly where we are in the current bull market. We'll also have a look at some of the wider markets as well as look at the 60-day cycle for Bitcoin. So if that sounds interesting, then without further ado, get yourself a cup of tea, sit yourself down, eyes on the screen, and let's get cracking. But before I begin, the usual polite reminder, please remember everything in my videos is just for educational purposes. So please always do your wider research before you make any investment decisions or any swing trade decisions. Okay, before I go into the legendary signal which printed at yesterday's weekly close, I just want to cast your mind back to the Thursday's video when I was talking about the pattern that was been playing out from the 2020 breakout here of its previous all-time high at around about the 20,000 mark. And this pattern here was this W pattern here with a double bottom, and I took a screenshot of this and implanted it to the current price action in 2024. So as you can see here, in 2020 the price came up to the 20,000 line here where we had a correction, came back and retested it, then went sideways with another correction before coming back and breaking above the 20,000 neckline. And you can see the exact pattern has been printed over the last few weeks. So we came up here to the 69,000, had this same correction from there, came back and retested it just one more time, just like over here, went sideways, just like over here, had another minor correction, exactly the same, and then moved towards the all-time previous high here. And this is exactly what we're doing at this precise moment. We're up to 72,000, and you can see what's about to follow this pattern here. So if this was to continue just like it has done over here from 2020, you would expect this to happen now. And I know many people don't think that these patterns rhyme or repeat themselves, but as you can see quite clearly, some of these fractals do repeat themselves. And some people thought that I was making a sensationalist comment saying that this was the last chance for people to buy the Bitcoin at these prices. And this now may well be the last chance. Okay, so I'm going to now go on to that legendary signal which just closed yesterday. And I want to cast your mind back to the first cycle back here in 2013. What I want to show you is that the previous high at this point in 2011 was broken at this point here in 2013. And around this time, you got this red candle, which is what we call a hangman candle, or you can call it a hammer candle. And basically with the long wick at the bottom is telling you Bitcoin is actually rejecting lower prices. And this was really the prelude for this big move here. And if you measure that move from the bottom of that candle to the top of the rally here, that was a 600% move. And if we move to the second cycle, so this was the top in 2013, and this top was broken at this point here. And right at this neckline, we can see this same candle one more time, the hammer candle. If we see closer here, there was one hammer candle there and another one printed just on this support line here. So these were the preludes to this big move coming up here. And that culminated in this short-term move of around about 235%. And in the last cycle, when the price came up to the previous all-time high of 20,000, you can see quite clearly we got two more red candles. This hammer candle here, and followed another week later by this same candle right at the neckline of the 20,000 previous all-time high. And this led to the big move to the 64,000 of another 260%. So guess what's just happened now? At yesterday's close, we got our second hammer candle. And this is your legendary candle that's been happening at each of the previous all-time high breaks. This is the second one that's actually just happened 2 weeks after the first one, which I referred to you in one of the previous videos. So 2 weeks ago, I mentioned to you this particular candle with the long wick at the bottom, that there's a rejection of lower prices. And we've got another one here. And this is the same as we've had in the previous three cycles at exactly the same point of the breakage of the previous all-time high. So we've seen the big moves after these candles are printed, and the lowest was over 200%. And if we were to go anywhere around the 200% from that candle, that would give us a price of around about 190 plus thousand. So only time will tell, but something incredibly interesting that we should all be aware of. While nobody knows what's going to happen in the future, nobody has a crystal ball, but what the charts do is they leave signals, they leave clues, they repeat the same thing over and over again. It's our job to elicit that information, to find out exactly what those signals are, and to make head or tail of what may follow afterwards based on that historical perspective. So I thought you might find that very interesting. Okay, before I go into the technical analysis of the Bitcoin price on the 60-day cycle and other time frames, we're going to have a look at what's happening in the background of Bitcoin to get the overall picture so we can put Bitcoin in context. And the first on the block is the ETF that's about to launch in Australia. And this is the first Bitcoin ETF. And this will go live in the middle of 2024. This means that around about the June time, which means around about the mid 2024, i.e. June time, we should get the first ETF approval in Australia. And this is very similar to what happened in the UK. The London stock market is willing to accept applications for Bitcoin exchange traded notes, as we call them here, by Q2 2024, once again by June this year. And these followed the Hong Kong regulator, which accepted the first applications for a spot Bitcoin ETF to be launched by the first quarter of 2024. So they look like they're imminent now. So you can see that worldwide, the ETFs are really gathering pace. So after the halving, what has happened in the USA of the Bitcoin ETFs is about to repeat all around the world. And if we have a look at exactly on the Bitcoin ETF tracker of what's happening currently with the USA ETFs, we had this massive influx all around here. And then we had the Genesis sell-off all down here, which looks like, for all probability, to be nearly all out of the system. And we're now starting to get these positive candles one more time. So the ETF inflows are still continuing, and we can expect more of that to come along now that a lot of us are selling in the grayscale is being flushed out of the system. And to give you the overall current picture, this is from the last update, which is today, April the 8th. We can see that grayscale is now currently holding 322,000 Bitcoins. And this is from the launch amount that they had of 620,000. So they are now less than half of what they were holding at the launch of the ETF approval. But as we can see that the BlackRock and the Fidelity and the ARK and everybody else has more than made up for the loss of the grayscale Bitcoins. And it may well be that grayscale continues to lose more and more of their Bitcoins because of the fees that they're charging compared to all their competitors here. It doesn't really seem to make sense to hold any Bitcoin in the grayscale. So this may well continue, but as we've seen, there's so many Bitcoin ETFs all around the world that are there to pick up all the Bitcoins from grayscale, as well as the halving coming up, which means that the supply from the Bitcoin miners is going to be halved in the next couple of weeks. And if we move on to the wider markets, we can see quite clearly on the SPX here, we've been on this massive run since October last year. And now we've just printed the similar candle that I've just showed you, the hammer candle. So this looks like, with a higher probability, that we're going to continue to the higher side. And if we have a look at the 60-day cycle chart for SPX, if you've been watching my videos, you'll know I put this white line here that I was expecting some sort of a correction at this point down to this line. It's obviously breached that down here. And it may well be we may have one more leg to come down to this level here at 5100. But as we've just seen with the weekly candle, it may well be that this green candle here is telling us that we're turning back up again. And this red candle, the bottom of which now forms the start of the new cycle here. And as we know, with the beginning of the cycle, we can expect quite a big upturn into the midpoint. So if that red candle now forms, as looks highly probable, the start of the new cycle and the end of the previous cycle, so that means that will be day 61 that we've now closed on that cycle. So this white line now will be the midpoint of this current cycle that we're now on, and this red line will be the end of the current new cycle, and that will be around about July, the 1st of July. So as you can see, we should have a good run into the midpoint before we have some sort of a correction here. So it looks like, so for all intents and purposes, we've got the green light now to carry on with the SPX to the upside. And similarly for the Russell 2000, we've broken this neckline now, and we've also come back and retested that support, which was resistance previously here. So there's only one direction this is going to be going over the next 6 to 12 months. And we can see with the dollar, and we've got this weekly candle close here, which is the engulfing bearish outside bar candle. And with a high probability, this only means one thing, the downward movement of dollar. And if I was holding gold at this point, which I'm not, but if I was, I certainly wouldn't be relinquishing any positions anytime soon. You can see that once the break occurred here, which we've been following for many months now, once this break occurred at this neckline, there's only one place it was going to go as expected, and that is to the upside. And there is further to go over the next 6 to 12 months. Gold is on a real tear at the moment, and this is the weekly chart. But if you look at the monthly chart, you can see quite clearly, having broken out at this neckline and closed above it last month, the current candle here is only going one direction. So we can now see there is a follow through of the break of the neckline here. So this is really a big trajectory for the gold. And as I mentioned in last week's videos about silver, that we were coming up to this neckline that with all probability, with the inverse head and shoulders pattern here, that we're going to break through this neckline, and exactly what's happened. So we've now had a weekly close above that, and the next stop, as I mentioned in last week's video, was going to be to try and breach this level here at around about 28 to 30. So this is the next stop. So you may get some resistance at this point before the final break to the upside, and to follow the trajectory of gold. And now it's time for your favorite part of this video. That's it, you've guessed it, the Bexit indicator. So in every video, we're going to be having a look at the Bexit indicators one by one to see exactly where they are and to see which one is going to be the first one that's going to give the green light in terms of reaching the top of the bull market. And today it's the turn of the Maya multiple. And this is the figure we need to keep in mind. Currently, it's now at 1.56, and we can see the actual ranges here. Below 1.0, we're in the bear market. Between the bear market and the bull market is between 1.0 and 2.4. Once we reach above 2.4, that's when we're getting to the top of the bull market. So this is something we need to be aware of, and at 1.6 we're nowhere near it, and this is giving us a measure of how far we have to go still. Okay, so on to the Bitcoin analysis. As mentioned in last week's videos, we were forming this bull flag from the bottom here at around about 38,000, and this was the bull flag, and we said that this symmetrical triangle is being formed in the top 1/3 of this bull flag here. And that usually means with a higher probability that this is what we call a continuation pattern to the upside. And we can see just today, it's now breaking up above that symmetrical triangle. But if we look closely, we'll know exactly which levels that we need to get above to make this a confirmation of the break of this symmetrical pattern. So once we break from these types of patterns, you have to look left and look at exactly where the next resistance is going to be. And you can see the resistance is going to be underneath these candles as well as the top of these candles. And that level is at this point here, which is at 71,000. So while it's currently on a daily chart at 72,300 as I speak now, what we really don't want is for this to now come back and leave a wick back to this support line. So we've got well over 12 hours to go, but this is where we are at the moment. It's currently breaking through these resistance points here. So it's critical in order to confirm this breakout for us to actually close today's candle above these levels here at 71,000. And it's very interesting if we look at the 8 EMA on the weekly chart. So this is the exponential moving average. Once we broke above this back here, in October 2023, we found continuous support all along this moving average over here and just recently over here as well, and one more time there. So it looks like with a good degree of probability, we're going to start moving to the upside now. So the next stage is going to be the top of this candle here at 74,000. Once we get past that, and that will be the move that will change your life forever. And why is that the case? Because historically, once we move above the previous all-time high, you can expect this big massive move, which is a life changer. Similarly here, we've got a big move to come there, and here we had a big move to come here. So based on the historical perspective, we can expect once we get above the 74,000, and in effect it's the 69,000, we should be expecting some sort of a big move here. Where that will be, we don't know. But because the last cycle's move was a little bit subdued to much less than what most people expected over here. People's expectations are quite low, which means that the price could go much higher than what the majority of people are thinking. So let's see what happens. Only time will tell. But this is the next move that we can look forward to over the next 6 to 12 months. And the 60-day cycle for Bitcoin, once again, has given us a lot of guidance, a lot of direction, a lot of information as to which way this Bitcoin price is going to go. So we've seen time and time again into the 60-day cycle low. The price goes, starts a new cycle, and then we go towards the midpoint on a high. And it hasn't let us down. So we've had a big fall into the 60-day cycle low here on day 57. So that's the start of the new 60-day cycle. And as I mentioned in the last few videos, is that what we can expect is a move into the midpoint here on a high. We should break this point between this range here, the bottom of the cycle, to the midpoint here. So this looks like a high probability play now into the midpoint before we have a midpoint cycle correction anywhere back to maybe even 74,000 before moving higher into the 60-day cycle low over here. And that would be at around about the middle of May, which means that we're now going to get the halving at around about the midpoint. So a lot of fireworks could be happening around this time, around the halving. So lots of information to elicit from the charts. And just from a strategic point of view, this is not where you would want to lose your positions. And for me anyway, I don't do swing trades in the latter part of the bull market because the market is designed to shake you out and then you have to buy back your positions at a much higher price. It is better to actually ride these corrections along the way, not just with Bitcoin, but also the Bitcoin miners as well. The sensible thing is to ride these troughs and peaks all the way through the latter parts of the bull market. And we are currently at the start of the parabolic phase of the bull market. So as soon as we break the 74,000, this will be where we will be, where everybody will be telling their relatives, their friends, their colleagues, wherever they are, whoever they are, they'll be telling everybody to go and buy Bitcoin because what they've seen is this big move over here. So this is basically where we're going to get to. This is the last bit that we've got. And as you can see, there's going to be wild swings along the way and the market will punish the impatient people here. And the Bexit indicators are designed to get us out at near the top as possibly we can. Nobody can get the top, just like nobody can get the bottom. But what the indicators are to give us some guidance. And somebody mentioned that what if after all the indicators are saying that we've reached the top, but then the Bitcoin keeps going up? And that is a very difficult question. And nobody obviously can answer that. All we can do is go by guidance. So the strategy at that point, let's say you get to over here, and all the indicators are saying that you need to get out, but instead the Bitcoin price starts to continue going upwards. And if that is your narrative, and this is the narrative you want to play to, then the sensible thing would be to do a dollar cost average out of the market like you would do a dollar cost average into the market down here. Perhaps make 25% incremental sales at these points. So if it does go up here, you're carrying at least 25 or 50% to a higher level. But obviously the danger of that is that if it doesn't do that and it starts coming down, then you're going to lose value of that 25 or 50% that you want to carry to the upper side. It's a decision everybody has to make, and we only have the Bexit indicators to guide us. And if they don't work, then there's nobody who can help us apart from making best guesses at that point by doing dollar cost averages over here. I just want to move on to a question that a lot of people keep asking me, and I just want to answer it here because it's getting a little bit overwhelming answering the same question from about 30-40 different individuals, and it's taking up a lot of my time, so I'm going to answer it here for everybody. And that is that, as you know, I'm not holding any Bitcoins, I don't hold any altcoins, I don't hold any Ethereum or anything like that. Even in the stock market, I don't hold gold or silver, and I don't hold anything except the Bitcoin miners. So as a result of that, I've ended up with quite a few comments of people thinking how silly I am. And I respect your opinion, I don't have any problem with that, and I know exactly where that opinion is coming from. But I tend to follow a lot of the very successful traders of old. And one that comes to mind always is Warren Buffett, and his quotation here, that diversification may preserve wealth, but the concentration is what builds the wealth. And what they're really saying is that while it seems like a sensible idea on the surface to hold a wide variety of assets, it's probably better the ones that you have real conviction in, they're the ones that are really going to build the real wealth for you. And you may be aware that Warren Buffett's longtime business partner was somebody called Charlie Munger. And as you can see here, he only held 3 stocks for most of the time in his portfolio over the last 50, 60 years. And he is one of the most successful investors of all time. So all I would say is that if you want to diversify, and if that is what makes you comfortable in your investment, because everybody has their own unique strategy to get to where we all want to get to, and that is the destination over here. So however we get to here, if that's through a diversification or by building wealth, by concentrating your investments in just a few stocks, whatever it is, as long as you're successful, then it's okay by me. And I'm very happy for those people who think that diversification is the route for them to get to this point here. And the other question I want to just answer here is that because everybody knows that I'm into the Bitcoin miners, and everybody has seen that since the ETFs have been approved since January the 11th, the perception is that the Bitcoin miners haven't really performed very well since then. And with the Bitcoin miners also doing a lot of diluting at this time, and it seems like that they may not get going, and that may well be the case. Nobody knows the future. I don't have a crystal ball. I'm only going by what the charts are telling me. And I can only present to you the facts as I see them. So this is one question that I keep getting asked time and time again. And it is something of concern, of course, I understand that. But this is a question from a valued member of the private Bitcoin miners member section that I run here at Wisdom Bites. So the perception here is that the mining stock prices keep falling even when Bitcoin price keeps going up. Is this because of stock liquidation? I think he means the dilutions here. And the general feeling is that the mining stocks may well be like playing snakes and ladders, where you're going up the ladder and then coming back down the snakes. Okay, so let me just answer this question for everybody to save everybody asking the same question over and over again. So the first thing I want to say is that no one has a crystal ball, and no one even knows that Bitcoin will get from here to over there. It's our expectation that it will get there because of what's happened in the past here and here and here. So without that crystal ball, so we can only go by what is done from a historical perspective and the price action, that what is done in the past is something that's going to repeat one more time. So that is where the probability comes from, i.e. there's a greater probability for this current price action to go from where we are now at around about the 70,000 to wherever the end of the bull market is going to be. So that's our expectation. It doesn't have to happen, but we expect it to happen because that's what's happened in the past. And I'm certainly not going to pretend to know anything about the future because I really don't know. And as I've mentioned many times, I don't know what I'm going to have for lunch, never mind what the Bitcoin price is going to do over the next 6 to 12 months. And regarding the Bitcoin miners, for those people who are worried that they may not perform as well this time around because of the ETFs and whatever other reasons people are trying to give, let me just give you the facts that are exactly what they are in the charts here. And that is that this is the previous halving. We can see that Riot, which is a very good representative of what happened in the past to many of the other miners. There weren't many of them about at that time, around about 5 or 6 that were listed on NASDAQ. But as we approach the halving here, it was already on a very bad trajectory to the downside. And then we had the COVID situation from which we recovered. But the overall general trend towards the halving was to the downside. And this is the orange line for the halving now. And we can see the trajectory is on a completely different level at this moment. We're going into it on a high here. So this is even better than what it was down here in the last halving. And for those of you who've been in this space for quite a long time will know that the miners, because the prices started to move over here at this point, they started to dilute because the prices were getting higher. So more and more of the miners were actually increasing their funding through the ATM, i.e. the at-the-market offering. And recently they've had a spate of them, and that didn't stop them from going from around here to the top and creating a 30-35x from here. So dilutions don't necessarily mean that the price is going to go lower. As long as the funds are used to increase and expand the business model and to increase their Bitcoins that they're mining, the rise in the Bitcoin price after the halving should raise all the ships, including the Bitcoin miners. The other argument that people keep telling me about is the MicroStrategy, that this time around the Bitcoin miners will not perform as well as MicroStrategy or BitX or any of the other alternatives to the miners. Let me show you this, which is the MicroStrategy chart. And this red line is where the approval of the ETFs occurred on the 11th of January. And if you take the price of MicroStrategy, where it had a correction, just like all the Bitcoin miners, from there to the top recently was 353%. And currently, even after the correction, the close of play on Friday was at 225% up from this point here. So despite the ETF approvals, MicroStrategy, a proxy for Bitcoin, just like the Bitcoin miners are, increased by 225%. And the average price MicroStrategy has paid for Bitcoins is anywhere around about the $45,000 mark. And you can see that after the last halving here, this white line, the price for MicroStrategy went up to its bull market top of 11x, 1100%. And for those people thinking that the miners have really underperformed since the ETF approval, only need to look at the CleanSpark chart here. So since the approval of the ETFs, so just like Bitcoin and MicroStrategy and the altcoins, etc., after the approval, they all had a correction. But after the correction, it's like MicroStrategy went up by 225%. CleanSpark here to Friday's close was up by 140%. And to its recent high, 280%. So I don't see any stifling of the ETFs, of the Bitcoin miners having their normal rallies. This is the normal ebb and flow. As you can see, as with all assets, this is the normal ebb and flow of the markets. You have rallies, you have corrections, you have rallies, you have corrections, you have rallies, and you'll have a correction, and we'll have another rally here as well. And if you think that is an exception, you can see quite clearly from the Marathons chart, one of the other main Bitcoin miners, from the ETF's correction here, after 11th of January, Marathon went up by over 130%. So nothing is preventing the Bitcoin miners except the perception that whenever we have a rally, we do have corrections. And this has happened time and time again, all through the Bitcoin miners' histories. If you look back here, every big rally is followed by correction. Every big rally, look, all the time, ebb and flow of the market. It's going to happen all the way. It's been happening all the way through the last many years. And especially in the last 6-7 months, but especially since the bottom of the market here at the end of 2022, look at the big moves that we've had. And this is just continuing, and it will continue. So you do have to have a stomach for these big moves to the upside and to the downside. And I think at the end of the day, everybody has to make up their own mind as to exactly what they want to do. If this is something not for you, then you just have to go to somewhere else, because nobody can guarantee that they will continue to do that. I can only elicit the information from the charts based on the historical perspective of the price movements. And the only record I can give you here is that for those people who are interested in what happened after the halving last time round, so this is the halving chart. Marathon went up by 120x. Yes, not 6 or 7x, just like Bitcoin did, but 120x. And Marathon topped out exactly around the same time as Bitcoin in November 2021. And Riot, as I've just shown you with the chart, they went up by 52x from the halving. And we had other figures like 71x, 19x, 22x, etc. So everybody has to make up their own mind of what they want to do with their strategy. And this is the reason why I'm fully invested in the Bitcoin miners. And everybody has to make up their own mind. And if you've got the mindset and their stomach to be able to ride out these oscillations until the end of the bull market, then you can join us in the private member section for the Bitcoin miners, where we do 2 videos a week on the Wednesday and the Friday. Follow a portfolio which is already well over 300 and 400% up. And we also do ratio trades, which are designed to increase our positions as we go further into the bull market. And we do a market update on all trading days, on every single trading day. As you can see here, we do regular trades, looking at all the new charts, exactly what's happening in the market, all the news, etc., etc. So if you want to join us, all you have to do is click the join button below every one of my videos, as well as a join button in the description box. And for the price of a coffee per week, you can have access to all the videos, as well as all the market updates on a daily basis, as well as the videos on the Wednesdays and the Fridays. Okay, so I'll leave it there. I hope you found value in the video. If you did, then please do remember to like and to subscribe and to turn on the notification bell. And if you've got any comments, questions or suggestions, leave them in the comments below. Until the next time, take care, stay safe, and I'll see you in the next video. Bye for now.